Hello, everyone. I've got a question from a new member, so I thought it might be nice to share it with all of you. For those of you who've got a busy schedule, sometimes it's a bit confusing matching price and time. Okay, so in order to clear out the confusions, a short video might help. Now, as usual, every day there's the Astro hours for the day. If I feel like there's some comment I need to make, I do make it. Okay. If I'm expecting something out of the ordinary, I do make a comment. Okay. Most importantly, though, if you have a busy schedule, or even if you don't have a busy schedule, but you want to get the good trades, if you want to do some cherry picking, right, then on Monday, this is what you've got to use, the swing days as well. All right. So, for example, if you're trading in a gold, I trade gold, right? So Monday and Wednesday. If you're trading Dow Jones, Wednesday, NASDAQ, Wednesday, Thursday, SP 500, Tuesday, whatever you're trading, you might want to wait for those days and then make your move, okay? And trade on those days. Why? Because they're swing days, they're high probability swing days. So, for example, if I take Monday and Wednesday on gold, let's go to gold. This is gold, right? As you can see, this is Monday, and it's the beginning of the week. So there's no real swing level here. We're in a sideways market. But Wednesday is a good one because we came to a level where the market was nice and easy. And I said on Thursday as well, we can follow that up. And on Friday as well, if the market comes back down, we should go up to 2015. Why? Because that's a PST daily target, right? 46, 2015. I also said that's a good buy kiss on the weekly. So we had 2015, both on the weekly and the daily PST levels. So what happened? Now, this was as okay zone. In the morning, actually, I was doing this video and I said this is also not a bad place to get in. I also said when I was doing that video, guys, you don't have to rush the trade because you can always go into a trade. Let's say this is an Astro hour. You can always go into a trade once the market breaks out and then comes back for a good buy kiss. Now, look what happened here. The market from here dipped down, still went up, broke out, closed above there, giving us a sign that we're going to go higher. More interestingly, is that the market comes back again into your 1120, which is 1220 my time, but 1120 on the platform. So what does that tell us? Well, this tells us on Friday, all right, you could have also used that time to get in, or alternatively, you could have waited for this zone because I did say 1996 is important. I did say that in the video, and I said this is where the manipulation is. So the market should dip down. If it does dip down at an Astro hour, this is where you can buy, right? And that's your Astro hour right there, which is 5 o'clock here, but it's 6 o'clock my time, right? So it's 6 o'clock my time, UTC +3, 5 o'clock on the platform. So all you got to do is trade the level at the right time, okay? And all you had to do, you had to wait for that time to happen, right? So if I turn this into this is a 5-minute chart, all right? And this is exactly 5 o'clock. So once this is over, then that is it. Now, once you enter the trade, okay, you can either enter it in a pullback or you can just go in, okay? If it's done the level, and there's like a double bottom here, if it's done the level, you can just dive in and put your stop loss either under the low of this bar. You can do it under the low of this bar because there's no gap here, all right? Or if there are gaps, then you can wait for it, okay, to pull back on a smaller time frame and then go. Or you can wait for the breakout and then push up on a breakout, all right? So your technical analysis style is your call, all right? But where we're heading and the hours and stuff, I give. But technical analysis wise, everybody's different. Everybody's different. Everybody's got their own style. So it's really up to you to determine that. Okay, you can go into a 1 minute chart as well and determine that, well, if I am going to go long, first of all, you've got to have a bias. Am I a buyer or a seller? If I am a buyer, where am I going to buy? And if I am a seller, where am I going to sell and what my targets are? And that's your 5 o'clock there. You can see the market is nice and easy, not giving any gaps here as well at all. So once this is a 1 minute chart, look, once this is over, the market is just pulling up. Okay, it's just pulling upwards. So even if you entered here, your stop loss could have been just under there, and your cover trade would be the daily pivot. But remember, we want to head for that 2015 as per the daily. See, 2015.15. So, okay, so be a bit conservative, maybe come down to, I don't know, 2014 and 70. But you can see the target was made in any case. I always like to, put the take profit slightly under there, under the target because of spread or volatility or whatever. But at the end of the day, that's how we can use it. So Wednesday being a good swing day, then Thursday, Friday, you can follow through, especially from the lows to go up. Now, the same thing is for anything else. Okay, this is SP 500. So as you can see, that's your Tuesday. Tuesday market making low, going up Wednesday, going up Thursday. If you come to the euro dollar, okay, once again, what was it? Let's take a look at the euro dollar. Let's see. On the euro dollar, what did I say? Thursday, Friday. So if you wanted to trade the euro dollar, look, that's your Thursday, that's your Friday. Okay, that's basically it. So Wednesday was a swing day for this one as well, but Thursday, big move up, and Thursday was a high that made that low. All right, so look, that's your Thursday high, market coming down. Okay, Friday as well. Now, if you got 2 days like Thursday or Friday, so it obviously means we might like go and retest the high. Okay, and this is why I said this zone would also be okay to go long. It was good to go long. I did say why, because the goodbye kiss right there at 40.16, which is 1.0743. Okay, so if the market comes back down to 0743 and it's an astro hour, we can go long. And if I turn this into a 5-minute chart, you'll see that when the market came down here, that's your 5 o'clock. So it goes up, and these are your targets there up there. So pretty straightforward. Obviously, if you're entering the trade here on the next bar, you don't want to put your stop loss all the way down there. You can put it just under the low there or under the gap there, okay? Or if the stop loss is going to be a bit too far out, you can reduce your volume, all right, and risk your trade accordingly. But it's going to work out the same thing with anything, any asset you're trading. For example, let's take a look to Dow Jones. I got Wednesday. NASDAQ, I got Wednesday, Thursday. Now remember, the indices are going together, right? So if I've got Tuesday, Wednesday, Thursday here, these 3 days, I have to keep them in mind because these guys move together. But Wednesday is a common day for both of them. So this will be a interesting day. We're either going to get a swing or this could be a good big move day. Why? Because these possible swings are either going to return, are going to make a swing, or they're going to make a good move. And if I want to trade, I want to be trading on these days where I can get my head into a reversal and catch a good move. So Tuesday was for SP 500, which was the low of the day, which was the low of the week for SP 500 in the market swing. And once it did that swing, let's see Dow Jones. What have we got for Dow Jones? Let's see. Okay, it's still opening up. All right, so let's do this. This is Dow Jones, right? So let's take a look at Dow Jones. Look, that's your Wednesday. Wednesday, Thursday market pushing up nicely. Right there, that's your Friday. That's your Wednesday. So once the market makes that low, which was an SP 500 day, you can easily follow that on a Wednesday and Thursday as well, because Thursday is also a swing day for NASDAQ. What does that tell you? It tells you that if that swing works out, we're going to have good days pushing up. And look at Thursday, beautiful up day. Same thing for, let's take a look again. NASDAQ, I've got Wednesday and Thursday. So Dow Jones from Wednesday all the way into Friday, making the high of the week. And NASDAQ Wednesday and Thursday. So Wednesday, Thursday market going up. Okay, all the way. Now on Friday, it made the high. And that was one of our D levels here. Okay, this is a volume level. But look at the Astro hours. The Astro hours worked so well. Okay, and this was a price level I talked about. Even if you went long at the Astro hour at this price, you still should have been okay, because you would have covered the trade up to the weekly or the daily, because they're sensitive levels. Okay, but after that big push, even if you bought, you would have been okay with the Astro hour. Look, let's turn this into a 5-minute chart, and then we'll see. Right, let's go into a 5-minute chart. Look, this is a 5-minute chart, and this is where it's all happening. And then the market just crashing down. And this is a 5-minute chart. See how that is accurate? That is exactly 5 p.m. on the platform, which is 6 p.m. my time. All right, on a Friday. So it makes sense. Okay, that's the 6 o'clock. It's 5 p.m. my time. 5 p.m. on the platform, 6 p.m. my time. And it just makes sense, because the market is down and it's down at a price. So going up from here is okay, because it gives you enough to cover your trade 1 to 2 at least. Because even if you entered here and put your stop loss there, you would have covered 1 to 1.5 by then. By the next Astro hour, this is the next Astro hour, market sells off. If you sold off here for that retracement, you still would have covered the trade. You still would have been okay. And even if that, you would have been okay too. That's the next Astro hour. But remember, I said target at end of day. All right. So I've got a target at 2140, 2300 my time, and target at end of the day. Whoops. And that end of the day is there. So wherever the market's going to end up, that's your target. And as you can see, that is the low of the day. Right? So if you sold here as well, you should have been okay, because your stop loss should have been above there. If you also used your technical analysis, and is there anything you could have done here? Maybe on the 15-minute chart, let's take a look. You got to put your technical analysis and the timing together. All right, so if you want to sell somewhere, it's got to be logical in terms of selling with the price. If you're going to buy, it's got to be logical in terms of price and your buy level. Okay, this is why, at the end of the day, this is where the market closes gap. It's a volume zone, and the market sells off. Okay. And that's basically it. And it's like that with everything. With Bitcoin as well, if you think about it, with Bitcoin, I say I wouldn't be buying at this zone, because that's this. I don't trade Bitcoin. This is a sell zone, so I wouldn't muck around with it. The only thing that could push you into a buy is it's a breakout on a PST weekly. So if it comes back down, you can buy intraday, but that would, like, for me, as far as I'm concerned, would be down here somewhere, basically. All right. So with Bitcoin, if you're day trading as well, and if you wanted to sell, okay, this is Friday, yesterday. So you would have been looking at 240 around here somewhere. Okay. I think that would have been 240, right? Here it is. Yeah, 250 to 320 on the platform. So 250 is going to be there, all right? And 320 is going to be there. So there's a bit of a short move there, as you can see. But with this, it's a bit crazy. All right, I don't do cryptocurrencies, but you see what my what my drift is, what I'm trying to convey. Okay, you have to have a bias. You've got to have your technical analysis set up, done, and then your hours are going to be just a matter of, okay, we're in the zone. Yep, opening pivot. Yep, sell it off. Boom. Okay. Up, yeah, weekly pivot, Astro hour. Yep, we can go long. Boom. You come up to the opening, you come up to the volume target there, or your PST target, like I said on gold, then that's it. You take your profit, you cover the trade, or if you want to push your stop loss, push it forward and manage the trade. Okay. But you need to understand, once we get to an Astro hour, okay, the potential for the market to turn around is there. So you either want to lock in profits, push stops forward, manage the trade. Okay, you can't just let it run like that forever. At the end of the day, we're matching price and time, and this is why it's so important. The Astro hours work really, really good, but you got to match it to your technical analysis. You can't just use them anywhere. Why? Because I might have made a mistake, and that's possible. And if I did make a mistake, then it might not match. Okay. So we have to be, conservative and prudent, and obviously use money management. And trading is a discretionary thing. At the end of the day, if you plan it out initially, then once you plan it out, that's the way to go. And then this is why I do the video. You plan it out. Okay, euro dollar. If it comes back down, this is my buy zone. It's a buy price. I've got it there from the PST. Okay, where's the Astro? Well, there are no Astro hours here. Okay, so we're going to wait for a setup. Okay, and this is the Astro hour setup. If you want to go long there, you go long there. Same with gold. Okay, this is whatever your setup is. Here it is, right? This is the price. We're saying we're okay for the retracement to come down here and want to go long. You see, you don't want to be mucking around if there's no Astro hour there. But this is your Astro hour. It's damn right on the price. And that's it. This is like, okay, we can go long here. Okay. And that's basically it. If you want to use your technical analysis to do it, that's also okay. Why? You can just go into your small time frame or whatever time frame you're trading. You can just wait for it. You see, that's your Astro hour. That's the market breaking out. So you can enter at the breakout, then put your stop loss just there or lower than that low there. Okay. Now that's your call based on your risk return analysis, but I'll give you the targets as well. I know where we're going, and I understand that we also need to cover the trade during the day. So once the market moves up, I'm always covering the trade. I'm never going all the way to one. I cover the trade. This is why I have two take profit levels. Once the market pushes up, that's it. You're covered. Then you can get rid of your other levels and just focus on this. And look, once this pushes up, look where we're going to the next Astro hour. So we're following the market according to Astro hours plus the target. And that's it. You come up here, you come to the target, you're out of the game. And here you've got like 1 to 5, 6 or 7 even risk return ratio. Okay. So understanding the time and the target and how they match is really, really important. And it just makes trading it makes it fun and less stressful because you don't muck around with your trade and you don't keep saying, oh, maybe I should take profit and get out because I don't know what's going to happen. Well, you're right. This might have dipped down and then gone back up again. But at the end of the day, you've got an idea about price and target so you can manage your trade calmly. And if something does go pear-shaped, well, that's just part of life. And you just have to accept the way that is. But as you can see, generally, trading the swing days and then following the swing days because they match your technical analysis is definitely a really calm and, practical way to trade. Hope that helps. Have a great weekend. All the best.